What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today I'm sure you heard that we got a 50 basis point cut from the Fed, and Jerome Powell had some things to say about this today. I want to play this clip, which is just over a minute, 1 minute, the key highlights from Jerome Powell's speech. So let's dive in and listen to some of these highlights.
Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025.
Does today's action constitute a catch-up in action given recent substantial revisions to the employment data?
So I would say we don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably down to 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. We're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower. In the current situation, reserves have really been stable. They haven't come down. We're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
What is up, guys? Welcome back to the channel. So I hope you guys are enjoying the price action for today. Every time there's a Fed meeting, an announcement like this, we just get the craziest price action straight up, back down. S&P 500 straight up, right back down. People are wondering, why aren't we just going straight to the moon right now? Because if you go on social media, just about everyone is going to say, oh my God, 50 basis point cut, send it to the moon, right? That's pretty much what you're seeing everywhere right now. But the 50 basis point cut is possibly a sign that the Fed is behind. Now, Jerome Powell made it clear today that he said they don't think they're behind. They waited to do this cut, and all the other central banks around the world were already doing them, and they felt comfortable enough to wait. So Jerome Powell made it appear as if there was, this was all according to plan, which maybe it is. But you have to ask, why did they wait to make a 50 basis point cut when they could have started with 25 and then another 25 and done a more predictable and gradual reduction in rates? That is sort of the big question mark here. And so some people are speculating that they are behind. So on the screen, you'll see the Bitcoin price, which is the candles, the S&P, which are the darker candles, the orange line, which is the federal funds rate, the red line, which is the inflation rate year over year, which is coming down, and the purple line, which is the Federal Reserve balance sheet. And in that clip, you heard Jerome Powell talking about runoff, the runoff of the balance sheet. Now, economics is just as complex as quantum physics in many ways. It's so difficult to understand everything and predict everything. A lot of people like to think that rate hikes is bad and rate cuts is good. People tend to just oversimplify everything because it's kind of difficult to go further than just the surface level. Now, what we saw in 2017 when Bitcoin had its run from 200 to 20,000 was that interest rates, the orange line, were increasing the entire time that Bitcoin was having its biggest bull run ever. Rates were going up. So increasing rates during this time period was not bad for the S&P or Bitcoin. Why is that? Well, some experts say that because the Fed was very predictable in the increase of rates, they said what they were going to do, and then they did what they said they were going to do. They did the exact rate hikes that people expected over and over and over. People thought, okay, I feel comfortable. This is predictable. I can speculate on the market. I can continue to do what I normally do. And the inflation rate was kind of just stagnant, going sideways. The Federal Reserve balance sheet was flat. We had a technological boom. A lot of big companies were coming up at this time period. So we were recovering from 2008, still at this time, right? This is 2015, still coming out of that recovery. And so things were good, right? In contrast to this time period, what we have going on right now is we had, money printing at higher levels than anyone thought possible after COVID, doubling of the money supply. Inflation rate goes out of control. The Fed has to increase rates at a very rapid and unpredictable pace. Rates rose at the highest velocity in US history from 2022 into 2023. So that was very unpredictable. Markets did not like that. S&P came down, Bitcoin came down. The Fed was also reducing its balance sheet at the time. And what you'll notice is that when the inflation rate peaked, that's pretty much where the bottom of the market came in. Smart money saw that the inflation rate had a sort of a Christmas tree top. They figured, well, there's probably going to be a pause coming in the future, in the distant future. And they front ran the pause. And now we've had a lot of sideways action in the market after the pause. Inflation rate comes down, hits a point that seems like maybe it's stabilizing, and markets begin to go up based on the stability of the inflation rate. Yes, interest rates are up. Yes, the Fed balance sheet is reducing. But inflation stabilized a bit here at this point, and housing prices were skyrocketing through these years. And there was still a lot of money floating around from the money printing, so that had a lasting residual effect on the market. And now here we are at this point where there's likely going to be a big shift in the way that things are going. As long as the Federal Reserve balance sheet is still seeing runoff coming down, then the markets may have a little bit of difficult time just going straight to the moon. But once the inflation rate hits their target and rates are, ticking down, and then the Federal Reserve balance sheet starts to flatten out and maybe come back up, that's when things would get really, really bullish. In the meantime, I think Bitcoin's still set for new all-time highs in the coming Q4. I think it's likely that in Q4 we hit new all-time highs. There may be some chop around that level still, at a slightly higher level. And then going into the new year, that's when we might start to see things begin to change for all these moving parts. And once again, the Fed cutting by 50 basis points is sort of a mixed signal in a way. It's not just bullish. It could mean that the Fed needs to hurry up because they could be slightly behind. And so, we'll see how it plays out. The interest rate likely to come down to 4.4% by the end of the year and 3.5%, I think it was, or 3.4% by the end of 2025. Jerome Powell also said that that could change if things in the economy change. So that is sort of just a quick summary of all the things regarding today's events. Now, in terms of the Bitcoin chart, we're sitting on a potential weekly RSI breakout level. And whenever this happens in the past, this is very bullish. It means like a half year up. And if we get this breakout, that means half year pumping into the new year. Doesn't mean we're going to go up in a straight line. We could still chop along this level, but then into 2025, we may see a lot more bullishness. Going back in time, this is 2014 RSI downtrend line. Once we break that right here, that's when you start to see the market's turning around. Go to 2018. When we break this RSI downtrend line right here, that's when you start to see a major run. Here, during COVID, we break the RSI downtrend line right here. That is during the halving, we run up right after. Same thing with the end of 2022. Break the RSI trend, run up. October 2023, break the RSI downtrend, run up. And we are just weeks away, maybe sooner, maybe later, but we're really close to seeing another run up. And so that will likely lead us into new all-time highs, despite if we get some chop there first, maybe, right? But ultimately, I think we're going to continue this run into a normal cycle. We're actually on time. Bitcoin never breaks the all-time high this early after the halving. So we're right on track in terms of halving cycle timing. And when it comes to price targets, upside targets, we can talk about that in the next video. In the meantime, if you guys want to get further insights, be sure to join the Patreon, limited slots. There is an annual discount, and these prices will not be available once we break the all-time high. We'll see whenever that happens. We want to limit the amount of people coming in at that point. So if you want to snatch cheaper prices for Patreon, get access to altcoin picks, trades, become a member of the community, support this channel, you get direct access to me in Patreon as well. Hope you guys enjoyed, and I'll see you all in the next one.